They say two things in life are certain: death and taxes. But here's the thing. That's only half true. Because for the wealthy, taxes are more like optional. Now, I don't mean hiding cash in a suitcase and flying off to the Cayman Islands. I mean using the exact same rules that everyone has access to, just smarter. The rich don't just make money, they understand money and the rules that govern it. Today, we're pulling back the curtain. This is how rich people avoid taxes legally. And fair warning, once you understand these strategies, you'll never look at your paycheck the same way again. Most people spend their entire lives working for money. The rich, they spend their lives learning how to make money work for them. And no, you don't need a yacht or a monocle to do it. Just a shift in mindset. Let's dive in. Point 1. The business advantage. Here's the first secret. The rich don't work for money. They own the system. When you're an employee, your income gets taxed before you spend it. When you're a business owner, you spend before it gets taxed. That's the game changer. Every expense, your laptop, travel, even part of your home, can be a tax deduction. Think about it. Two people buy the same $1,000 laptop. One loses $1,000. The other reduces their taxes by $1,000. The difference? Ownership. You can't write off Netflix unless you're reviewing documentaries for a business podcast. That's how the wealthy structure their lives, through business entities. And when they start owning assets instead of just earning income, things get really interesting. Point 2. The real estate loophole. Real estate isn't just about rent checks. It's about tax flow. Through something called depreciation, wealthy investors can claim their property loses value every year, even as its price skyrockets. It's like saying your house is falling apart while Zillow says it's worth more than ever. Then comes the 1031 exchange. Sell a property, reinvest the profits into another one, and pay zero capital gains tax. Yes, zero. That's how the rich keep compounding wealth, property after property. Light humor. Meanwhile, most people sell a house, pay taxes, and celebrate with pizza. But the smart ones? They don't sell at all. They borrow. Point 3. Borrow, don't sell. Here's a secret billionaires love. They don't sell their assets, they leverage them. If you sell your $1 million in stock, you owe capital gains tax. But if you borrow against that stock, you owe nothing. Loans aren't income, so they're not taxable. That's how the ultra-rich fund their lifestyles. Luxury homes, yachts, private jets, all technically on borrowed money. They pay back those loans later, often using future profits, or never at all. And when they die, their heirs get those assets completely tax-free. Let me explain how that's possible. Point 4. The step up in basis. When someone dies, their investments get a step up in value. If grandpa bought Amazon stock at $10 a share, and today it's worth $500, his kids inherit it as if it was bought at $500. All those gains? Erased, no taxes. That's how generational wealth quietly passes on, untouched by the IRS. You could call it the ultimate IRS ghosting. But while they pass wealth down, they're also giving some of it away, strategically. Point 5. The charity play. Rich people don't just donate, they engineer their generosity. Instead of giving cash, they donate appreciated assets, stocks or real estate. That way they avoid capital gains and get a tax deduction. It's called a donor-advised fund. They lock in a big write-off today and choose later where the money actually goes. To the public, it's generosity. To the IRS, it's pure strategy, transition. And they're not just doing this for themselves, they're training their families to do it too. Point 6. The family payroll trick. Wealthy families don't hand their kids money, they hire them. They pay their children through their business for real work. Social media help, bookkeeping, design, whatever's legitimate. That income is taxed at the child's lower rate, and the parent deducts it as a business expense. It's a win-win, and it teaches financial literacy before they even finish high school. Imagine earning an allowance and a tax break at the same time. Here's the truth. Rich people don't avoid taxes because they cheat the system. They avoid them because they understand it. They study the rules everyone else ignores. They act on incentives the government rewards. They build, They invest. They create jobs. And the tax code says, thank you. You don't need millions to play this game. You just need the mindset. Because taxes don't punish the rich. They punish the uninformed. Now that you know how the rich keep their money, it's time to learn what's keeping everyone else broke. Click the video on your screen. 7 money habits that keep you broke. Because understanding taxes is one thing, but breaking bad money habits, that's how you start building wealth. This is the capital grid. Break the habits. Build the wealth.